Micron shares have been on fire year to date. These results did arrive in a moment where the market has been a little bit stressed over the AI trade and sort of the sustainability of some of these figures. When you take a look at what we learned from Micron about 20 minutes ago, what does this tell you in terms of a temperature check?
I mean, I think it tells us that we're earlier than most expect. And my sense is a year ago, we were in the third inning of this AI build out. I now think we're in the second inning. And specifically, if you look at that revenue guide that they gave, that 300 and call it 40% revenue growth for the August quarter, that compares to 300 and just under 370% that they just reported in the May quarter. And that just shows you the sustainability to grow, continue to grow at these rates in the face of the law of large numbers is remarkable. And I think just to kind of quickly pull this forward to, this is really the substance of the earnings tonight is what does this mean for the AI trade? And I want to put some specifics around it. The hyperscalers, as Matt mentioned in the previous segment, account for about 50% of Micron's revenue. The hyperscalers for next year, the street is expecting them to grow their CapEx, which is really a proxy for all the infrastructure build, by 22%. Now that compares to what will be up about 80% in calendar 26. Now, interestingly, a few weeks ago, that number for next year was 15%. So we've seen that inch up. But effectively what we've seen tonight, and this is kind of the punchline, Katie, of your question, is that the street is starting to get more comfortable at growth rates for the hyperscalers and the broader CapEx of 40% plus. And what that means is that these companies are going to continue to grow faster for longer than most investors expect. And despite all this skittishness within the market, this is just just a resounding endorsement that we are, in fact, earlier than most believe in the build-out.
Well, you're hitting on something that I've been wondering about, that, perhaps we're getting spoiled by some of these numbers here, because you think about Micron in the most recent quarter reporting a four-fold increase in revenue in the latest quarter. But then you take a look at revenue growth, what it's projected to be in fiscal 2027, growth of 76%, and then 7% in 2028. You could make the case, if you were feeling a little bit bearish, that maybe we are starting to see peak earnings.
Well, I would kind of take that and build on that. And I think that the case is, are investors ever going to get comfortable that we are, in fact, going to continue to grow faster for longer? Said another way is that if the market just continues to take these impressive blowouts and these impressive guides as an indication that we're going to see some material deceleration next quarter, if that kind of fear that we're always going to see a deceleration, if it happens to be 27 or 28, if that just continues to persist, then it's very difficult for the multiple on some of these companies to go up. We've, of course, seen that with NVIDIA. NVIDIA's numbers 3 months ago, the street was expecting mid-20% growth. They're now expecting 40% growth for calendar 27, so it's gone up materially. But the stock over the last month has underperformed the Nasdaq, down 8% versus the Nasdaq down about 5%. And so I think that to me is the there's the size of this build out, and I think some of these companies that have gone up so significantly, I do believe that some of those will become more challenged to continue to really grow.
So, I mean, the Micron story is interesting, and obviously whatever's going on with the Vera Rubin and its partnership with NVIDIA. But I do want to talk about just how this whole trade, the chip trade specifically, is broadening out. And as we're speaking right now, Gene, you might not be able to see it, but Qualcomm's holding its investor day. The CFO giving some relatively bullish commentary about the potential growth that Qualcomm has specifically in that AI data center space, obviously a broadening of their business away from just that smartphones that we all know and love them for. Do you buy into their ability, and more importantly, some of these other companies' ability to make a more meaningful pivot into AI and actually be a legitimate player?
I mean, we've seen a lot of companies kind of have this new life, whether it's Qualcomm or Intel, and I guess Micron to some extent. And Romain, the simple answer is that I think we are just much earlier than what most believe. And I think that how this kind of continues to expand out. I think the next chapter that still is not fully appreciated is around personalized AI. And this is kind of the Qualcomm angle to this too. It's also the Apple and Google angle. A year ago, if we're having this conversation about what's next, we'd probably be talking a lot about what's going to happen with agentic AI. And obviously that now has kind of been a well-traveled theme. But I think this next chapter, that chapter being late this year into 27 and 28, will be around that personalized AI. I think you're going to see kind of a resurgence in consumer tech around that. And then probably after that, we'll start to see physical AI become something that is more potent. Keep in mind, despite all the talk of what we've seen in ride-hailing and autonomy on that, this year, less than 2% of total Waymo and robotaxi, Uber, Lyft rides will be autonomous. And so I think that that's kind of the sequencing. But overall, this is still broadening out. I think that the market is just uncomfortable, but will be proved wrong that this has got more legs to go.